tell you why. I told you, for us to know that this strong high has created the weak low, it has to create a QM, right? It has to create a QM. But did this low create any QM? Did it run above any swing high? The three candle formation. Did it run above a swing high that created a lower low? Did it do this? Did this low do this? See that? No, it did not. See how important this is. See how important the three candle formation is. Did it do that? No, it did not. So can you take this low as a structural point? No. If you can't take that low as a structural point, can you use this as a structural point? No, because this low was the one that created the high. See that? And as a matter of fact, this right here was an Asian high. So why would you trust it to hold now? Inducement. See that? A perfect inducement. Just like that. It is not even a structural point. See that? You cannot take this as a break of structure. Now, obviously, if you go to the 5-minute, you will have a break. That is why we use the higher time frame. See that? We do have a break. We do have a break on the 5-minute, but that is why we use the higher time frames. Do we have a break? No, we do not. See that? We do not have a break. Can you understand that? Okay. So then, what is your low then? We have the strong high. This is not the low. This is not the high. But here we have the low. Created a lower low and then broke structure. Then broke a swing high. See that? A swing high that, see, a QM. That's a QM, right? See that? Okay, so here we have the low right here. Okay, so if you're taking a trade here, where did price come into? Right into this imbalance. Tapped and then bam. Right into the target. So you had another sell right there. Easy, very, very easy. Okay, see, accumulation, I told you, Asia, accumulation, false run in the opposite direction, inducing bias into the market, and then what happened? Dropped. Okay, dropped back down. So that's the thing. I'll show you more examples, don't worry. Okay, like, look what happened here. Now, many people would have looked at this as a breakout structure point, right? As a breakout structure point, they would have looked at it this way, and they would have taken this as a breakout structure. So imagine how many people would have wanted to buy from these areas. Okay, many people would have wanted to buy from those areas, and look at the reactions you get. You get good reactions, and look at this candle. Look how big that candle is, straight through it, straight through everyone that wanted to buy it. Okay, everyone gets stopped out. Like, yeah, you could have refined this maybe. You have the imbalance on the higher time frame. Let's see what we have. Yeah, I think we have a breaker. Yeah, it was a breaker. Let's go to the 5-minute. Yeah, there was no proper way of refining it. Right here we had the breaker. Yeah, see that breaker? Last, see? Can you see that breaker? Yeah, not the buy candle. Okay, the down candle, see that? That is where they place the buy order to take this liquidity out. I told you about the breaker. Where is it? It's here, where the liquidity got taken out. Okay, so yeah, that is where the breaker is. So we had no way of refining it. Okay, we had no way of refining it. But if you go to the lower time frame, you could have taken a trade, a beautiful trade. Yeah, see this? What's the confirmation we need? That's it. Here we have that. A swing low. See that? Once again, a swing low. Higher low to the left, higher low to the right. What's that? Broken. Okay, like if you use the line chart, here's the confirmation we need. Okay, then what is all of this? Inducements. Okay, here is your sell zone. Sell it here. See that? Sell it here. Okay, sell it here, or else if this candle is too big, use the 50%. Like that. Use the 50%, sell it. See that? This whole area is your sell zone. This whole area. That's the sell zone. Okay, stop loss can be above this high maybe. And where are you targeting once again? The low of your trading range. See that? The low of your trading range. Yeah, the body of the candle. Like that. Okay? You can use it this way. Like this. See that? You can use it that way. I'm sorry. I didn't hear you. Yeah?
We don't need to consider that big, right?
This
On the
week?
top, on
No,
top.
you don't have to. You don't have to, because why? The inducement was right here. Okay, so what's the closest point of interest? Is this candle, right?
Yeah,
Not the wick.
yeah.
not the wick. Never went into the wick. See that? Never went into the wick. Now, yeah, let's assume that it was like, yeah, let's say the stop loss was too big or something. Okay, let's say the stop loss was too big or something. Okay, now let's wait and see how we could have gotten another entry. So you see, we have a stop hunt here. See that? Stop hunt and a breakout structure. Major structure was broken here. Minor structure was broken here. Okay, so how do we know this strong high has created a weak low? Now this is a QM, right? This is a QM. This is a QM. So then this whole area becomes your point of interest, right?
And there is a
That
need to
becomes your point of
trigger
interest.
that.
Yeah, we have this inducement. So let's wait until price gets there. Okay, tap into that, and that's it. You can sell it there. If you do not like this point of interest, you can sell it here. Stop loss can go above that high, 2 pips. And yeah, wait. Okay, it came up. No, dropped. No
Okay.
problem.
So
Dropped.
here,
Okay, so that was
according
safe.
to
Yeah.
oh, okay.
Now this becomes another QM. See that?
Yeah,
I think we might, yeah, I think we can expect sells. See that? You can just continue. Stop hunt. Yeah, let's see how this played out. Breakout structure. Okay, now, yeah, I think price is starting to come back up. We have a swing high. Let's wait for it to break. Okay, here it broke.
oh, so in
Yeah,
like
yeah,
that,
what's
we
that?
consider this also as a QM.
That's the QM. See that? So you can take this as the trading range. That's why I
I
told you.
mean, this is not a valid swing, so can we consider it as a break?
A valid swing. Why is this not a valid swing?
Yeah, this one.
Yeah, see that? Created a swing low
Oh, okay.
and then broke. See
Maybe
that?
in a 15 seconds or
Yeah,
maybe
on a lower time frame for sure you can see that, but on the 1 minute itself you can see that.
yeah,
What's that? A very clear QM. See that? Bearish QM, bullish QM. What are you gonna do? This whole bullish QM becomes your point of interest, right?
okay. So
This whole area
we can do
becomes your point of
otherwise.
interest. So, yeah, let's see. Let's look for a higher time frame point of interest. So we have this
Okay.
imbalance on the 5 minute. But what's missing? The inducement is missing, right?
Yeah.
There is no liquidity resting below it. Let me refresh this once again. There is no proper liquidity resting below it. See that? Okay, so that's the reason. Now, this might be a little risky. Okay, this trade might be a little risky, but yeah, let's see how it played out. I think we were somewhere around here. Yeah, now let's see how it actually played out. This was the 5 minute imbalance, something like a hidden base. Can you see that? Yeah, let's use that area. Let's see on the 15 minute, nothing. We had the wick. See that? 1 minute. Yeah, 1 minute hidden base two. Okay, let's see how this played out. If it creates a swing high here, then it's gonna be high probable. Why? Liquidity.
Yeah.
Ah, yes, here we have. Yes. See that? Inducement once again. Okay, because it's an algorithm that runs the market. Okay, because now the algorithm is programmed to run the same way because they can't make one algorithm for one time frame and another one for the other time frame, right? Because even though there is buy stops here or not, the algorithm identifies this swing high as liquidity. See that? Can you understand that? You could sell it here. Yeah, 2 pips, safe. It's safe, or else you can have it here itself because see, safe, 3.8 pips. Okay, no problem with that. So even if it decides to go here and taps this, no problem. But yeah, let's say we had a 2 pip stop loss. This should be your safest target. And what's your other target? Down here. Okay, the 15-minute traded range. So let's see. Okay, yeah, perfect. Yeah, didn't get stopped out. Okay, didn't get stopped out. Now we break even. Yeah, might even
So
come back
we are
up.
on the low time frame, right?
Yeah.
Bullish Q.
Okay, let's see what happened.
Okay.
Okay, it's coming up. Created a QM, see that?
Yeah.
Took out liquidity, broke structure, tapped.
Yeah.
Yeah. See how if you train your eyes, it's gonna be awesome. Yes, created a bullish QM. See that?
Yeah.
Bearish QM, bullish QM, into the bearish QM, and then comes the drop. See that? Endless opportunities. Retest, retest, re-entry. See that? All of these are re-entries. Let's see. Okay, into the targets. Done. We had another beautiful sell. That's it. You saw that, right? How many opportunities did we have here? Bearish QM, bullish QM, into the bearish QM, sell it.
Yes.
See that? Can you understand that? I hope it's clear. Just like that. Okay, we have another sell. Okay, now let's wait. Now we are gonna take a huge sell. Okay, we're gonna take a huge sell. Why? What is your trading range now on the higher time frame? Your high time frame trading range is from here to here, right? What confirms that? This break. Then
Not
all of
close to
this,
the.
now look at this. Yeah. Now, if you take this as a strong high
Mhm.
and this as the weak low, okay, now can you expect sales from these areas? Can you? Yes, you can expect sales, but look at what they're doing. What's that? Trend line. Okay. So you don't want to enter with retail traders, right? You will get stopped out. You will get stopped out. So if this is your trading range, what is this? Internal range liquidity. See that? Internal range liquidity. Then what you can do is look for the POI right above the internal range liquidity. See this? A very clear order block. See that? A very clear order block. Now you could do this. Why? Liquidity being fed into that point of interest. See that? Liquidity being fed into that point of interest. Okay, so you could just directly, yeah, we have these cells. Let's do it like that. Okay. Okay, liquidity being fed into that point of interest. So if you want to, you can put your stop loss above the strong high, target this low. That's a 1 to 11 if you do that. And it's very safe. Okay, stop loss is above a strong high. And see, this is an extremely premium price of this trading range. And even on the daily time frame, it's a premium price, right? So it has a lot of chance of playing out. Can you understand that? But for me, the stop loss was too big. So what I did was I refined it to the breaker. This is what I did. I refined it to the 5-minute breaker. Okay, see this? What is lining up with this order block? What is lining up with this order block? We have this 5-minute breaker. See that? Can you see that? A QM once again. Okay, that's a QM. See that? Okay, see that? So I told you this is where the breaker block is. Now, what's the logic behind this breaker block? Now, to take out all of these highs, okay, to take out these highs, okay, this is where the push up started. See that? This is where the push up started, which means they are placing a huge buy order from here, and then they are placing a huge sell order from here. Okay, so this is where they are in drawdown. See that? Now, what would you do if you were in a loss? If you were in a drawdown, you will wait until price gets into the break even at least, right? Break even at least. So same thing. They are not using stop losses. They will push price back and mitigate out of that loss. See that? They will push price back up into at least the break even. So this is where they are in a loss, right? From here. From here. This is where the buying started. See, these candles never went above this high, which means this was the highest candle, and that highest candle was formed only after this push up from this swing low. Can you understand that? Okay. So yeah, I'm refining it to that. And then, so rather than having this whole area marked out, I'm selling it here. Now remember, on MT4 you can't do this. You have to always factor in the spreads. Okay. I'm just showing you my this trading view setup. Okay. Yeah, I'm showing you my trading view setup. This is not the MT4 setup actually. You know that. Okay. And then yeah, you can wait. You can wait until price gets there. What happens? Okay, now imagine how many people would wait for this trend line to play out. A lot, right? And bam, into the entry. Everyone that wanted to sell from the trend line got stopped out. Okay, internal range liquidity is cleared. We are in the trade. Now, why is it high probable? Liquidity being cleared into the extreme premium price. Okay, inside of a daily premium price and a daily strong high. And we are inside of this. Okay, where are we targeting? Now, if I'm taking a sell here, this is where I'm targeting. See that? What happened? Bam. Look at the drop. Look at the drop. And then into the targets. Okay, into the targets. Now I don't risk 1% on any trade because like I'm trading a 100K FTM account. Like, why would I risk $1,000 on 2 pips? So that's a 50 standard lot size. And you know, living in Asia, it's hard. Okay, like 200, like $1,000 in my country, it's 200,000 rupees. So like, what if price just wicks above this and it falls? Think about my psychology. Like I'll be like, oh shit, I lost 200,000 rupees. Okay, so my psychology will not be able to bear up with that. Okay, so I'm only risking around $100 per trade. So if I risk, now that's the thing. If I risk $100 on this trade, what's my lot size? A five standard. Why? Five standard into two pips, that's $100, right? Five standard. And if I'm holding everything into this low, what's that? 4,500 pips, $4,500. See that? Like, what more do you need? That's enough, more than enough for the whole week because we're in an Asian country. Okay. And yeah, we're taking this sell, take your partials. Now I use something like a four standard because I told you on MT4 I can't do this, right? I can't do this. Okay, so I use something like a four standard, closed a three standard here, leaving a one standard into where? Into the daily, like this.
Okay.
See that? Daily to daily, right?
Yeah.
Now look at the risk to reward ratio of 1 to 207. See that? Now that's not 207% of my account, but I'm just showing you. Okay, that is a 1 to 207 now. Okay, so yeah, we have that area marked out. Okay, so you understood the cell, right? How we used all of the concepts. Okay, yeah. Then we have another strong high. Why? Took out liquidity, broke major structure. Strong high. So where does my attention go into? The candle that took out the liquidity. See that?
Yeah.
Like this. The last push up that swept the liquidity. That is where my that is where my attention goes towards. Can you understand that? Okay, because that is where the push up started to clear out the liquidity. Then let's wait for a breakout structure, and you can do two things. You can even, like I told you, you can wait until price gets here, or you can hedge it. Now see here we had a direct entry because why? It was in a premium price, extremely premium price, and it was a 1 hour small range. Okay, an order block. But here we can't take a direct entry, right? Like look at the size of this point of interest, a 40 pip range. Now, if you do this, like who would do this actually? It's always safe. Yeah, stop loss is not gonna get hit, but yeah, that's too much, right? Too much. So let's wait for a confirmation. Simple. You can either wait until price gets here, or else you can hedge it. Okay, so what I did was see this QM for me. See that?
Yeah.
Okay, stop punt and a breakout structure. So I wanted to buy here. Look what happened. Okay, then shit happened. Came back down, created an inducement. See that? A short-term low, and yeah, wicked below my stop loss, and then it started going for some reason.
Oh.
I don't know. Things like that happen, so can't help it. I got stopped out. Okay, so yeah, now we have a trade in range from here to here, right? See that? Because why? Bullish QM, bullish QM. See that? A swing high got broken. Okay, or else you can even use this break. Yeah, you can even use this break. And then again, now this is how we could do ping pong. Okay, can you hear me? Yeah.
Yeah.
Okay. I thought I'm lagging or something. Okay. Now this is how you
I'm
could do
audible.
QM.
Uh,
Yeah.
um, Please wait. I should
Okay.
go for annotation too. Okay. Your POI was here, right?
Yeah.
So it's a bit confusing for me. Why did you took your POI here?
Why? Because see, inducement was here. Let me show you what I used. Here it is.
Mm, oh,
See that? What is this? Internal range liquidity, right?
yeah.
So I used that, and yeah, price just wicked below my stop loss and it started going. Can't help it.
Okay.
Okay, just wicked below my stop loss and it started going. So yeah, I got stopped out. Okay, so because I can't show you all of my wins, right? Like I'm getting stopped out too. Okay, so I got stopped out here. I got stopped out. Now, this is how you could do ping pong. Okay, look at this high right here. An unmitigated bearish QM.
Yeah.
Stop hunt, breakout structure. See that?
Mm.
Unmitigated QM.
There is an inducement too, right?
Okay, exactly. We have an inducement too. See that? Okay, this right here is internal range liquidity of this. Okay, so what you can do is have that area marked out, inducement,
So
and
the
right above the
imbalance will
inducement, yeah,
become our POI, right?
yeah, you can take the imbalance or as the wick, same thing, yeah, both of them lining up in the same place. See that? You can use it like that. And then if you want to, you can go to a lower time frame and refine it. Yeah, you can put your stop loss above this high, see that? Above that high now. Can you understand it? Simple. Okay, you can have your stop loss above that high